Hello viewers, welcome to my channel. I'm Hasham. Last video I have completed 4 problems on capital gain. In this video, 5th, 6th and 7th, 3 more problems I'm going to explain. So if you have not watched the earlier videos, go to the playlist of my channel. Select the subject income tax for the assessment year 22-23. Watch the theory videos of capital gain. Be perfect about the provision, then you can easily understand the problems. So before starting the 5th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready and take the screenshot of the points, then I'll explain. Come on, see the problem number 5. 5th problem. Sri Harsha is owning a house and used for residential purpose. The house, which was constructed for 1,80,000 40 years ago. On 11th July 1995, he entered into an agreement to sell the house to Mr. Abraham for 8 lakh and received 80,000 as advance. Mr. Abraham failed to pay the balance amount and consequently the advance money was forfeited. So first of all, the house was purchased. That means the house was constructed 40 years back, before 1/4/2001, for rupees 1,80,000. Later on in 1995, he entered into an agreement to sell the property and received advance, but the sale consideration was not fulfilled, so advance money forfeited. According to the provisions of Income Tax Act, if advance money is forfeited before 1/4/2014, then that advance forfeited should be deducted from cost of acquisition. If advance received is forfeited after 1/4/2014, then the advance money forfeited will be taxable under income from other sources. So two different provisions. Here the advance money was forfeited before 1/4/2014. So this advance forfeited will be deducted from cost of acquisition. The house is sold during the previous year for rupees 90 lakhs and the selling expenses were 1 lakh. So first of all, you can see computation, Sri Harsha, computation of LTCG for the year. It's a long-term capital asset because the SSC hold the asset for more than 3 years. Then consideration received 90 lakh. Selling expenses 1% of 90 lakh, 90,000 deduct net consideration 89 lakh, 90,000. Now we have to find out the indexed cost of acquisition. That is the only difficult point. The house is sold during the previous year for 90 lakh and the selling expense 1%. FMB on 1/4/2001 was 15 lakh and the stamp duty was 14 lakh. Stamp duty and FMB both are given. The FMB should not exceed the stamp duty value. Here the FMB is more. FMB is 15 lakh, stamp duty is 14 lakh. So we should take 14 lakh. The FMB should not exceed standard stamp duty value, but here it is exceeding, so we take the stamp duty value 14 lakh. During the previous year 2002-2003, one more floor was added to the building at a cost of 6,30,000. Cost inflation index 105. That means improvement. There is indexed cost of improvement. And in 2008-2009, 3 lakh rupees is spent for renovation and painting. Cost inflation index 137. Renovation and painting, it's a revenue expenditure. It is not a capital expenditure. So the deduction for this renovation and repairs painting will not be allowed. So in working note, you should write down the expenditure incurred on renovation and painting should not be considered, not allowed. Capital expenditure for adding one more floor or rooms, that's a capital expenditure. Then calculate the income from capital gain and tax liability if income under other head is 1 lakh. So we are required to calculate capital gain and income from computation of total taxable income. First of all, indexed cost of acquisition. The asset was purchased before 1/4/2001, so the SSC can choose higher of the following two: actual cost or FMB on 1/4/2001. The advance received was forfeited before 1/4/2014, so this advance money should be deducted from cost of acquisition. See here, every problem we are coming across one or two new points. you cannot be able to remember all the points. So always write the notes, whatever I'm explaining. Keep a notebook, calculator ready. When I say something important, immediately note it down. Advance money received before 1st April 2014. Deduct the advance from the cost of acquisition. Now, stamp duty value is 14 lakh, whereas fair market value is 15 lakh. According to the provision, fair market value should not exceed stamp duty value. So stamp duty value 14 lakh we should consider, we should not consider 15 lakh. Since stamp duty value is less than FMV, so stamp duty value should be considered, that is 14 lakh. The asset was purchased before 1/4/2001, so the assessee can choose higher of the following two. Actual cost, that is 1,80,000, or fair market value. Instead of fair market value, we are taking stamp duty value, 14 lakh. So the cost of acquisition is 14 lakh. But the advance amount forfeited rupees 80,000 should be deducted from 14 lakh. Because actual cost 14 lakh rupees is the cost of acquisition. But advance money received forfeited should be deducted. So 14 lakh minus 80,000, 13 lakh 20,000 is the cost of acquisition. Now indexed cost of acquisition, 13 lakh 20,000 into 317 by 100. Current previous year index is 317 and the index of 1/4/2001 is 100. Any asset which is purchased before 1/4/2001, the index number should always be taken as 100. So 41,84,400, 41,84,400. This is the indexed cost of acquisition. Now indexed cost of improvement. It is given some rooms are added. During the previous year 2002-2003, one more floor is added to the building at a cost of 6,30,000. Cost inflation index 105. So 6,30,000 is the improvement made. One more floor is added. Current year index 317 divided by index number of the year in which floor was constructed. It is given in the problem 105. So 317 by 105, 19,02,000. This is the indexed cost of improvement. Add up both indexed cost of acquisition, indexed cost of improvement, 60,86,400 total. Deduct. We'll get 28,33,600. This is the long-term capital gain. That's it. Now, indexed cost of acquisition. Renovation, repairs, expenses are not considered. Just now I told you these are revenue expenditure. It should not be considered. Now, income from other heads. Normal income is less than the basic exemption limit of 2,50,000. For the current previous year, the basic exemption limit is 2,50,000. Whereas the income under other heads is only 1 lakh given. So there is a deficiency in exemption limit. There is a deficiency in exemption limit. Out of 2,50,000 exempted limit, income from other heads is only 1 lakh given in the problem. In case of resident individual, the deficiency in exempted income can be adjusted. So for resident individuals, whatever deficiency in exempted income is there, that will be adjusted from long-term capital gain. How? Deficiency, 2,50,000 exemption limit, 1 lakh rupees is the income under other heads. So deficiency 1,50,000. This 1,50,000 can be deducted from LTCG. The long-term capital gain deficiency is this much. The long-term capital gain is 28,23,600 less deficiency 1,50,000. So taxable LTCG 26,73,600. This is the taxable LTCG. Tax on LTCG 20% flat rate. So 20% of 26,73,600, 534,720. To this mandatory health and education cess at the rate of 4%. The 4% calculate 21,389. Total 556,109. So we can round it off to 110. Instead of 109, we can take 110. So 5,56,110 is the tax liability. That's it. This is the end of problem number 5. Now problem number 6. Srimati Chennamma constructed a building for rupees 5 lakh in the financial year 85-86 and spent 5 lakh rupees is spent on for adding one more floor in August 2001. So the building was purchased in 85-86 before 1/4/2001 and one more floor was added in August 2001. She sold the building for 55 lakh during the previous year. Stamp duty value 63 lakh. Selling expenses are 64,000. One more new point. The SSC sold the building for 55 lakh. But at the time of sale of the building, the stamp duty value was 63 lakh. That is the new point in this problem. So according to the provisions of income tax, here you can see full value of consideration. Whenever stamp duty value and consideration received are given, so we take the full value consideration. How? The stamp duty value is more than the consideration received, hence the full value is taken into account to calculate the capital gain. So when we compare the stamp duty value and consideration received, so we have to find out the full value consideration, which is higher of the following two: actual consideration received or stamp duty value. The actual consideration received is 55 lakh, whereas stamp duty value is 63 lakh. Whichever is higher should be taken as full value consideration. So full value consideration is 63 lakh. So here you can see full value consideration 63 lakh. Minus selling expenses, transfer expenses 64,000. So 62 lakh 36,000 is the net consideration. From this we deduct the indexed cost of acquisition. So indexed cost of acquisition was, at the time of purchase, he purchased constructed for 5 lakh. But FMB on 1/4/2001 is 15 lakh. When an asset is purchased before 1/4/2001, the SSC can choose higher of the following two: actual cost or FMB on 1/4/2001. So actual cost was 5 lakh. FMB on 1/4/2001 is 15 lakh. Stamp duty value is 16 lakh. But again we'll see, while calculating the cost of acquisition, the fair market value should not exceed the stamp duty value. It should be less. So here it is less. Fair market value is only 15 lakh, whereas stamp duty value is 16 lakh. Don't take stamp duty value. You have to take the fair market value, FMB, 15 lakh. So 15 lakh into 317 by 100. Current previous year index 317 and base year index 100. So 47 lakh 55,000. I'm putting in the bracket because we have to subtract. Bracket denotes subtraction. Indexed cost of improvement. For adding one more floor, he has spent 5 lakh rupees during the year 2001-2002, right? So that 5 lakh rupees into 317 by 100, 15 lakh 85,000. This also should be deducted, that's why bracket. So 62,36,000 minus 4755 minus 1585, you will get 1,04,000 negative. Negative means loss. There is a long-term capital loss of 1,04,000. According to the provisions of Income Tax Act, the capital loss cannot be set off from other incomes. It should be set off only from capital gain. The long-term capital loss can be set off only from long-term capital gain. If it is not there, if the long-term capital is not there in the current year, it should be carried forward to the next year. So this 1,04,000, if there is no long-term capital gain during the current year, it can be carried forward to the next year. Next year, if there is long-term capital gain, from that long-term capital gain, last year's long-term capital loss can be deducted. That is the provision. So presently, just we have to say this long-term capital loss should be carried forward, right? Now, income under other heads is 7,90,000. That is given in the problem. Now we have to compute what is the tax liability on 7,90,000. Slab income rate tax. First slab up to 2,50,000. Income is 2,50,000. Tax is nil. So slab up to 2,50,000. Income 2,50,000. Rate nil. Tax nil. Second slab goes from 2,50,000 1 to 5 lakh. The income range is 2,50,000. For second slab 2,50,000, 5% is the tax rate. So 2,50,000 into 5%, 12,500. The next slab goes from 5 lakh 1 to 10 lakh. But our income is not going up to 10 lakh. Our income is going up to 7,90,000. Not going 10 lakh. So we'll take the balance. The balance 7,90,000 minus 5 lakh. So 2,90,000 is the balance. On this 2,90,000, 20% is the tax rate. So it comes to 58,000. Take the total, 70,500 is the basic income tax on the total income. To this we add health and education cess 4%. So 4% health and education cess 2820, 73,320 is the tax liability. That's it. So this is the end of problem number 6. Now problem number 7. Mr. Akram, age 82 years, means super senior citizen, purchased gold ornaments on 10th March 1998 before 1/4/2001 for rupees 7 lakh. He took a loan by mortgaging ornament 5 lakh and interest due to the date of sale 92,000, and the same is sold during the previous year for 30 lakh. So the SSC has mortgaged the gold and taken a loan. On this, interest is due. Income Tax Act says the interest on mortgaging the asset is not allowed as reduction. Simply in working note you should write down the interest due on loan mortgaged by gold ornaments is not allowed as reduction. Ignore. And the same is sold during the previous year for 30 lakh. The gold ornaments are sold. Consideration received 30 lakh. Selling expenses 4,000 due but not paid. Again, Income Tax Act says transfer expenses, selling expenses will be allowed as deduction only if it is paid. If it is due but not paid, no deduction is allowed. So this 4,000 not allowed. Calculate capital gain for the current assessment year. Cost inflation index for 21-22 is 317. Already we know it. Every problem we are applying. The current previous year 21-22, the index number is 317. That's it. Now, Mr. Akram, the heading you should write down: computation of long-term capital gain for the assessment year 22-23. Consideration received 30 lakh given. Less transfer expenses, selling expenses not allowed as deduction because it is due but not paid. If it is paid, it will be allowed. Not paid, not allowed. So net consideration 30 lakh. Less indexed cost of acquisition. The gold ornament was purchased in 1998. Any asset purchased before 1/4/2001, the SSC can choose higher of the following two: actual cost or fair market value. But in our problem, FMV is not given. Fair market value is not given. So we take the actual cost. Actual cost is 7 lakh. Current previous year index 317. And any asset purchased before 1/4/2001, the index number is 100. So divide by 100. So 2219 long-term capital gain is 7,81,000. So simply it is asking you to calculate long-term capital gain, and we have calculated. Now in working note you can write transferred asset. In our problem, transferred asset is gold, and the gain arising on this transfer of capital asset is a long-term capital gain because the SSC hold that asset for more than 3 years. He has purchased in 1998 and sold in 21-22. So more than 3 years. Hence it is a long-term capital asset. Gain arising is LTCG. Then transfer expenses. Selling expenses are due but not paid. Hence it is not allowed as deduction. And interest on mortgaging the ornament is not allowed as deduction. In examination, you must write all the working notes. Simply don't calculate and come out. You have to write. Examiner will see what information do you have regarding all these points. So we have completed so far 7 problems on capital gain. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, the next problem will continue in the next video.